Hello, Finimars. Well, welcome to another Finimars Live. My name is Luke, your Finimars analyst, and I'm hosting today's event on a guide to prop trading with our partner, The Trading Pit. I'm personally very excited about today's session. So first, just let's run through a couple housekeeping rules. Feel free to introduce yourself in the chat. Tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. This is a 15-minute conversation followed by a 15-minute audience Q&A. Use the Q&A box to ask a question, and if you see a question you like, upvote it so it moves to the top. That way we can get through the most upvoted questions first. Okay, let's kick this off. So our event partner for today is The Trading Pit, who are creating the prop trading, investing, and asset management super app. It's safe to say that trading can be an emotional roller coaster. The team at The Trading Pit have been through that journey thousands of times and have now paved a safe path for you. They're fueling their traders with the knowledge and tools necessary to become successful partners of The Trading Pit, where you can potentially earn some incredible profits, like up to 80%. But we'll get into how the app works and the pros and cons of prop trading as we dive into the conversation with our expert speakers. So I'm joined today by Illimar Mattus and Christoph Radecker, the two co-founders of The Trading Pit. How are you doing today, guys?
Hi, guys. Pleasure to be here.
Hi, Finimars. Thank you for having us. Hello.
Perfect. Great. Fantastic. Okay, well, let's dive in, Finimars. So, Illimar, I'm going to address the first question to you. Just briefly explain what prop trading is.
So basically, there are conventional traders, and a lot of traders have talent. And the problem that these traders face is that they usually don't have a lot of capital. So they don't have actually the opportunity to make money from the strategies, from the knowledge, experience that they have gained over the years. So how prop trading works is that we intend to find globally these talented traders, put them through the challenge, and then through passing the challenge, we are able to assess how worthy these traders are to get access to capital. So a lot of the traders think that they have a lot of talent. In fact, most of the traders think they have talent, but actually, when you give real capital to these people, you have to be sure that they are not going to blow up your money the next day when they start. So that's why we have the challenges, and they pass this, and after the challenges, we give them the capital. And that's how the conventional prop trading has worked over the years as well.
Great, thanks for that, Illimar. And then over to you, Christoph. What would you say are the key objectives and goals of The Trading Pit as a company?
I would say our DNA is that we want to be fully aligned with the traders. So we want to avoid, in essence, really any conflict of interest to the trader. We consider them our partners, and in essence, we want to all make money. So that's, I would say, the common ground, what we want to achieve. So traders want to earn money. We want to stay by their side in order to help them to manage their risk better. And we want to grow together. And and that's in essence, to be honest, there's not much secret sauce behind it, but I would say it's really the alignment to the trader, no conflict of interest.
Great, that's always good to know. And then I think just, Illimar, give us a broad overview of how the Trading Pit works in terms of maybe just some of the very general rules that one needs to do to progress through the app and the challenges, as you mentioned.
So basically, there are challenges in different asset classes. There might be different rules. There might be different profit targets as well, daily loss, total loss limits as well. So it depends a lot on the instrument, on the risk that we have on the instrument, and with an aim to assess the traders as fast as possible. And as they get more knowledgeable, more experienced, they become more successful in the trading. Then they pass through various stages to get access to a lot of capital. And the largest amount of capital we give here is 5 million. But I also want to reiterate that in parallel of our challenges, we work a lot also with professional traders who have already managed capital for many years. And in these cases, when we get access to their track record, it happens also that we don't actually force them to go through the challenges. We do like customized deals with them and give our capital to them. So it depends on the level of the experience of the trader. Bless you.
Thank you, Illimar. Sorry. Weather in the UK here. Yeah, great. That's fantastic. Okay, so it differs between different asset classes. It's also really interesting what you said about that professional traders are also using your services that have managed capital previously. Christoph, is this something that one can do on the side while having a normal 9-to-5 job, or does it require full dedication and focus?
It's actually a difficult question, I believe, to be honest. I mean, trading is one of the, I would say, one of the jobs one of the jobs where you have to really work smart, not hard. So working more hours doesn't mean that the result is better. All comes down to how you position yourself, how much risk you're willing to take, and how you manage your risk. I believe that it can be done on the side if you want to trade swing. Often, I think that even swing traders who are trading maybe swing trading currencies, for example, are doing better than hardcore day traders. So I believe it's really about you to find your style, what works for you. Personally, I think it's really, you should start from swing trading. And if you really want to go to the day trading approach, then you have to do this very carefully, because I think it's more tough and the result doesn't mean that it's better.
Okay, great. That's really interesting about the swing trading point that you mentioned there. And then I think just following on, I read in your bio there, Christoph, that you became disillusioned with the high failure rate of among new traders. So I guess some of the things that I thought of, what causes this? Is it poor risk management, taking too large a position size, too tight stop losses, losing trades too long and cutting winners too soon? What are your thoughts?
There are various reasons. I talked to Illimar about it as well, and we are both in the industry a long time, 15 years, basically together 40 years, I guess. So a really long time, and we discuss this basically all the time. And there are various reasons. I personally believe that when we talk about leverage trading, then that it's a lack of buying power, to be honest. In essence, really money, what you really have. Then I believe it's over trading, and I believe that also, and that's quite normal, I believe that you really cannot take losers fast and you cannot let winners run. And in essence, this is all, to be honest, I believe. But overall, if I would have to summarize it, I think it's a lack of discipline plus lack of money. Because if I only have, let's say, $500 in a leveraged account, CFDs, whatever it is, I mean, what do you want to achieve? I mean, doesn't work normally. Yeah. So that's the reasons I believe. Illimar, maybe you have a different opinion there, but that's what I believe.
I mean, it's like the benefit that I have. I've been involved in the brokerage industry, like Christoph as well, for many years, and I've seen like hundreds of millions of trades passing through our systems. And what is like really interesting is that 80% and plus trades that, like, for example, retail brokers process, so 80% and plus, they have no stop losses. So just put this into perspective. So 80% of trades are entered into the market, whereas the trader does not even have any intention to stop his losses. And then when it comes to the remaining 20%, then plus 50% of these the stop losses, they start like shifting the stop loss as the market starts moving against them. So there's no discipline really. Like 90+% of trades, there is no stop losses, like ultimately.
It's crazy. Wow, that's such a high number, and it's such an important tool, risk management. And even as you said, moving it dynamically as the market moves, like maybe like lowering it, giving yourself more space, but then making your losses larger.
And what is also interesting, I can give you one other statistics. So if you take any like retail broker where you have a lot of traders, so hear me out now, 66-67% of trades are all profitable. Okay. But the average losses per trade are 2.3 times bigger than the average profit on the trade. and it doesn't change from month to month. So it's like 2.3, 2.35, 2.4. So it's like any month you look, it's like this. So again, like no proper risk management.
Yeah, that's really interesting about the losses, the average loss being a lot bigger than the average gain. Even though that win rate is much higher, you've got to find trades where your risk to reward is much better, like 1 to 2 at a minimum. That's at least what I do. But yeah, very interesting from that data perspective. So I guess on the flip side then, what do you think are the essential traits necessary to be a successful trader? Maybe you can give us a bit more data from successful traders on the trading pit, like length of time they hold the trades, or maybe the instruments that are most profitable. That'd be really interesting. And both of you can answer this.
Do you want to start, Illimar, or should I?
I mean, it depends really on the asset class and on the like the profile and the strategies of the traders. So it's really simple. Like most of the successful traders, they have stop losses. They don't overtrade. They manage the risk properly in terms of also the size. They stick to specific asset classes. So I've never seen like traders that are successful in like different asset classes. They trade commodities, they trade futures, options, FX, and they are all successful. So mostly they are all like focused, extremely disciplined, and they take the time off if they hit like losing strike. So they just leave the markets. And also what is very interesting is that a lot of successful traders, before actually coming to the live trading, they always test everything on demo. Whereas conventional trader from the street, they go to 1 or 2 courses in their hometown. They open the first trade, which has stop loss. Then they take the first profit there, and the following trades, there are no stop loss. So they already think that they know everything better than the market and all the other traders. So yeah.
Okay, so we are 12 or 30 minutes in, and I have a different opinion, to be honest. So I believe that it's not just about the stop loss, it's really about the discipline, but I really think it comes really down to the amount of funds what they're trading, really, you know, because I think yes, there are people who basically are very successful in what they do, but a lot of guys don't know when to stop. Yeah, that's a big point. Overtrading is a big point, but I'm not fully agreeing with Illimar here. But I really think it's really let's say the lack of discipline to stop, I believe. So basically, even if you're successful, you have a losing streak, and when you then basically are failing, basically to go out of the car, go out of the, let's say, roller coaster, this is really the tough one. My background is from the futures industry, and what I can tell you is in retail, 80% of the retail accounts, day trade accounts, they fail basically with one trade, because they tend to love this one trade, and maybe they double the size, triple the size, and until it explodes. So what's happening is basically they have a lack of risk management, and they don't also get the tools to basically manage their risk. So and this is basically where we come in. So basically we are I believe, in the middle between a broker and basically a normal account, because we help these guys, we discipline the traders to manage the risk better, I believe.
Fantastic. Well, I think those insights are going to be very helpful, and especially over the years of experience. As you say, most retail traders blow up on the one trade, they get married to that trade. What's the best instrument then, in both your opinions, for someone new to start trading with FX, commodities, indices? What in your opinion is the most likely for them to be successful with?
I think from my side, like an instrument that they feel most comfortable and understanding this instrument. So, for example, in the Middle East, we have a lot of traders who are trading gold, because like historically, that's like a gold-oriented investment and trading market. So in some other markets, like in Germany, they might be trading DAX. So mostly like to stick to the instrument that they actually understand, and not only like look also into the technical like data, but also like fundamental data where they understand like what's really happening in that market.
Christoph, do you have any insights on that?
I think it depends on the trader, to be honest. But I think if I personally think that the best instrument is really an instrument maybe which is not trending that much. Currencies are, I believe, markets which maybe are trending, but they are not moving 5% a day. Maybe when you look at the stock, 10%, 15% of stock movement could be easily possible. So it really comes down to what kind of trader you are. But I think the currencies, for example, could be a good instrument, for example, to start to feel out a little bit who you are. Overall, I believe that stocks are a good instrument, and for sure, if you're the more active guy, you can trade CFDs or futures as well. From our results so far, what I can tell you is that the more successful traders are the FX traders, to be honest, and gold. So, and this is something what is a huge surprise for me, and this is also what we discussed with our educators as well. But it's quite obvious that the let's say the people who pass and the payouts are, to be honest, are bigger in Forex as of now. Just comes as a surprise to me, frankly speaking. But so I think that futures traders are not more professional than the Forex ones, and so there's right now the data what we have that the Forex ones are actually more profitable. So
that's super interesting, actually, and FX is definitely my favorite space to play in. So I guess one of my other questions is, and it's come quite personally for me, is knowing when to exit a profitable trade. It's like a fine art form. What systems or thoughts, what structures do you put in place to try and optimize that process of knowing when to get out, not too early, but also not too late, maybe where it's rolling over and reversing?
I mean, I personally, like when I trade, and I trade mostly futures and futures options, so I have trailing stops, and always I have targets as well for trading. So again, like most retail ordinary traders, they don't have like targets. So neither stop losses, neither profit targets as well. And what I use a lot is Fibonacci, of course. And I also trade, since I trade futures mostly, I use like seasonal trends, which is something that a lot of people are not used to trade, but I use a lot of like seasonality, like when there is like rainy season in Brazil, or I know also like when there are droughts in Florida, and it affects the orange juice. And so this is like a lot based on fundamental data as well, like what's happening on the market.
I'm a believer in automated trading systems, to be honest, because here it's easier when to stop a system overall. So when I look at it, so basically you have data, you have, let's say, your profit factor, you have your average win rate, your average trade, largest losing trade, and you have your, at least historically, your maximum drawdown. So when I look at these numbers, it's at least for me easier to understand, hey, maybe there's some issue with the market conditions, or maybe the system approach has an issue. So, and this is happening to me basically as we speak. So, for example, I have a system which is running really great on the mini S&P. It used to have a drawdown of about $4,800, $5,000 a day trade system, basically running on 30-minute bars. Basically, it has now a drawdown of about $7,000, $7,500, and is now at new equity highs. But yeah, so this was a tough one, but at least you have some data when you really have to watch an approach really carefully. I think as a discretionary trader, it's more hard. I believe it's more about position sizing, to be honest, and when to exit as well. So I would say when, let's say, the Illimar has a seasonal trade, I would probably enter, let's say, with a couple of position sizes or contracts, CFDs, whatever, and also exit partially. And I think because it helps psychologically quite a bit, I believe.
Yeah, no, I completely agree with that. Using partial positions to scale out. Those levels that you scale out at, would that be based on major, if you're buying, would that be based on major resistance levels, or?
So, I mean, this is just me now, Illimar, sorry for jumping in, but you know, there's so much I've seen it so much that basically I have not made money or profits, or I basically didn't make profits because I was using technicals. If you trade, I think a systematic approach, you have to live with it. Yeah. So what I believe is really, if you trade something, you really have to stick to the rules and not try to overfit it, I believe. Yeah. I mean, you might be right at one time, the other not, and that's costing a lot of money then.
Yeah, okay, great. Well, I muted myself there. We've heard enough from me, so let's get into the audience Q&A and hear what the viewers have to say. So I'm just going to go and look at which ones were upvoted the most. Okay, start from the top here. Okay, James asked, what are some key points to look out in the news to inform my trading?
I'm trying to find the question, to be honest.
It's fine, I can
repeat it.
Yeah, it's fine. No worries. So James asked, what are some key points to look out in the news to inform my trading?
You mean that he means that like what are the key news sources, or what does he mean?
Yeah, I would think like what are the key points in the news that you would need to look for that would affect your trading? I suppose it differs depending on what asset class you're trading. Like FX could be central banks, inflation, GDP, jobs numbers.
Yeah, I mean, it's like it comes back also to like what we said earlier, is that I think to be successful, one should like really stick to one asset class, and then it builds. Then he builds up like also these information flows that are coming about these asset classes. Like for example, for gold, like there are like one source. I trade a lot of seasonality, so I have completely different set of news sources. So it depends on a lot of the instruments. On the FX side, it's purely like economic news. And this is like kind of you can get this data from pretty much everywhere, like.
And that the sources in terms of like getting that news, does Trading Pit provide that, like an economic calendar with that sort of information?
Yeah, we have an economic calendar, but we also have a Squawk box. So the Squawk box basically is like a kind of a news commentary, which is basically available during the day. There's also some charts being seen. It's a go-to, I think it's a go-to meeting, and basically there's somebody commenting. I think when it comes down to news, I think the most difficult part is to read the news and to basically judge the importance of the event. In essence, I believe. Let's assume there is an event. Let's say there's a drought somewhere, and it's now the third time it's being mentioned. Maybe the effect isn't that big. So it's a lot about knowing your market, I believe. So I believe you have to know when the news event is. You have to basically have an idea of the risk if you have positions, and also have to have a game plan what to do. I'm not a fan, at least me personally, to go all in at the news. And this is what we are trying to do. So when you look at basically right now traders who are starting out, or even the more experienced ones, they have an account, let's say 10, 20, 50K. At some stage they risk more, but our approach here is different. We want to give them not 50K, we are giving them 500K, 1 million. So they don't have to go that crazy on the leverage on their accounts, but trade, let's say, more normally, more with basically brain, and that's basically what we do. That's our approach. So.
Great, fantastic. Well, we've got a data question here from Carla, who asks, she's addressing it to you, Illimar, because you mentioned the statistics. She says, you said 67% of trades are profitable. Over what period until they close out or are stopped out, or are trades profitable in the first 24 hours, for example? Thanks.
Okay, so that's really interesting. So I've done this data over many years, and so I checked closed trades. So 66-67% of all closed trades in a retail FX brokerage industry, for example, are profitable, and are loss making. And wait.
67%
are
profitable.
Yes. So 67% are profitable on closed trades. And when you look at per trade losses or profits, then profits are 2.3, 2.4 times higher. And what was really like striking for me, very, very surprising, was that I looked at different months, like whether 2022 March or 2023 February, the data is the same. So it's like this some like evil mathematics behind there, that's how it is, like. And yeah,
I believe it's all psychology, to be honest, because if you're in profit, you don't want to lose the profit. That's all when you look at trading systems, for example, when you want to move your stop to break even, for example, when you move the stop to break even, let's say quickly, let's say when we talk about Forex, let's say about 10, 20 pips in profit, you start to move the break even stop to break even, the stop to break even, you will most likely be stopped out. And your rate, basically the number what Illimar is mentioning, is sadly, it is completely understandable to me, because people want to have a check on the win because they are so afraid to lose. But if you are losing, you're not afraid to lose more, because there's still hope that it could turn around to be break even. That's just my hard-learned lessons, to be honest.
And this is actually like it's an important topic in that sense, that this is also like where risk management like is extremely important, and why in a lot of hedge funds, for example, there are separate risk departments, like that sits separately from the traders, so that to control the risk and interfere where something gets out of the hand. And that's also the reason why we have like these loss limits, daily total loss limits here, to make sure that eventually when we give a real capital to the traders, that they are not just going to blow up the whole account. So this is really really important.
I just wanted to. Sorry, Christoph. Yeah, I just wanted to get on.
I would like to mention one thing, because it basically goes back to start how we began about what is prop trading, what is a prop trading firm. So in the early days, the prop trading firm maybe was in London, 10, 20, 50 guys sitting in one floor. At the next door, there was a risk guy, or let's say 3 risk guys. Okay. And I've heard it, I've known these guys, and basically what happens there, knock, knock, knock on the door. Hey, keep me in. Keep me in the trade. I know that I'm over leveraged, and this time I know, but it will turn around. Our model, what we have, let's say our online prop firm, maybe not as sexy as these old, let's say, historical firms, but our model has an advantage for us as the firm, and also for the trader, because I would say the psychology part here is really it's being replaced with technology. Because we manage our risk, as Illimar said, on a daily basis. We are a technology company. I would say we are risk-taking fintech, really focused on technology. And this is, I believe, where the online prop trading firms have an advantage over the old ones, because the human factor between the friendship between the risk manager and the traders, at least it's not there, because the physical aspect is not here. Sorry.
Great. Yeah, that was a really good answer on that question. Malcolm's got a question. He says, which sectors would you recommend starting in with prop trading?
Okay. When it comes down to our products, or the products of prop trading firms in general, you will find, I believe, most firms offer FX and CFDs, and a lot of firms offer futures as well. I believe it really comes down to your style of living. Maybe you're a guy who can dedicate 2 hours a day, and you want to close out your book. Let's say maybe futures, let's say in the evening right now is a good time for you. Or you're a guy, maybe you have time on the weekend, you want to maybe do some on the swing basis, maybe, and then it would be clearly for me currencies. The expectation though is, take your time. Our, let's say, Forex challenges really, you can play around for basically 90 days or 3 months. So these are really designed that you are able to take your time, though the futures ones are, let's say, for 30 or 60 days maximum right now. Why? Because there's a big data cost fee from the exchanges. So that's the difference here, why the futures ones are more limited. So I would say it really comes down to your time and availability, and also maybe what kind of life you want to live. Because day trading is very stressful. It's, I would say, a huge amount of stress in a short amount of time. And the swing trading, I believe, is you're doing less trades. You have way more time to prepare your trades. It's stressful for sure as well, but I think I believe it's probably a more relaxed way of trading, I believe.
Yeah, I prefer swing trading personally. I don't like the sort of watching every minuscule price move myself. William's got a question. If I'm a new investor but looking to trade, what steps should I take to get started?
So I would first of all, I would follow all of our like webinars and educational materials that we have published, and not only ours. So there are other sources in the internet as well, but one should pay attention like who is he listening to. So what is like speciality about us compared to like many other firms is that the people that do webinar seminars for us, these are actually verified real traders. So we bring these people to educate our traders, and then pass these classes, various webinars that we are doing, and try on like very small challenges, like not jump over to like very expensive challenges where you get access to a lot of capital, but start from smaller ones, and the smallest one we have today is $99. So it's not a lot of money.
I believe as well, really invest time in finding the trading approach what you like. If you want to invest money, I would say really invest in the beginning in your education. And when it comes down to demo accounts, I believe I'm a kind of fan of a demo account, but also not a fan, to be honest, because I think a demo account, if there's nothing on the line, you don't care. And in essence, you will jump to a live account as well. This is why I love our product, to be honest, because I was in the brokerage industry also 15, 16 years, and I've seen people failed. And I believe our product has the advantages of basically even more advantages than your own account, but it limits your risk basically to a demo account, or let's say $99. Yeah. And this is why I believe that there's an advantage.
Yeah, I suppose
I would just maybe add one thing. So we haven't touched this topic at all. It's psychology. So when you start managing other people's money, the psychology starts affecting you a lot. And in that sense, like if you trade demo or real account and money of other people, your behavior in a lot of cases changes. And this is very important to get accustomed to this. And then you have to actually start from smaller accounts and see if you can actually cope with this psychological sort of pressure as well, because the money we give out here, that's not some like Mickey Mouse money. It's real money that we put out on the actual accounts, that people start trading.
Yeah, I completely agree. I think the psychology aspect and having skin in the game, demo account versus real money on the line, definitely affects people's emotions in different ways, and that therefore affects their trading abilities. Look, we're running out of time here, but I do want to finish just with one last question, so try and answer as quickly as possible. What Oscar asked, what competitive advantage does the trading pit have over the competition in the prop trading industry?
Okay, I will go quick. So first of all, the founders, directors of the company are all coming from the real trading, prop trading industry. So we understand the business very well. We have real capital in place here. The education tools that we have are used by real traders, and the people that do webinars are also real traders. And we have no conflict of interest here. We are not running our own like brokerage company here. All the trades go out to like third-party brokers. So it's very transparent, clear business that we have here. And just one last point is that it's very important also from the transparency perspective that when people come to our website, they see who we are. They see what is our background, what we have done before, and this actually builds trust in us and between us and the trader. Whereas in most other firms, you don't even know who are behind these companies. So transparency is very important in trading and investing in general.
I couldn't have said it better.
Well, on that note, I'm afraid that's all we have time for today. I've really enjoyed the session today. Thank you so much, Illimar and Christoph, for joining. I'm sure the people watching have also found it super informative and enlightening, all with that data and everything. And yeah, thanks for joining. I really appreciate it.
Thank you guys. And just wanted to add one thing that so we are with Christoph, we are very open. We have public profiles in like social media, LinkedIn, etc. If anybody has any questions at all, shoot us an email and we'll directly answer anything that you have, any questions. Thank you.
That's really fantastic, because a lot of companies don't do that. So I'm sure everybody will appreciate that. Thanks, Illimar and Christoph, for joining once again. Had a great session. Cheers.
Thank you,
Thank you for having us. Bye.
Goodbye.